In Japan, we designate self-regulatory organization, self-regulate crypto industry. So there are many self-regulations that applied to VASP. It's not, kind of mandatory requirement, but still a lot of service providers are trying to comply with those regulations. And then, there is no regulation to prevent insider trading at a low level, but self-regulation has those requirements.
The collapse of Mt. Gox put regulators around the world on notice that digital assets could no longer be ignored. There is no regulator that got that message louder and more clearly than the Japan Financial Services Agency. Hi, and welcome to Public Key. I'm your host, Cheng Ong, Head of Policy for APAC at Chainalysis. Today, I have an insightful discussion with Ryosuke Ushida, Chief Fintech Officer of the JFSA, about the pioneering role their agency had in crypto regulation and how Japan was able to successfully strike a balance between innovation and risk mitigation. Ryosuke shares the evolution of Japan's holistic digital asset strategy, involving cross-agency collaboration to seamlessly integrate regulatory and innovation goals. He discusses stablecoin regulation, international harmonization of crypto policies, and tackling security concerns stemming from cyber threats, while showcasing Japan's multifaceted approach to fintech and digital assets. Before we jump into the episode, on June 18, 2025, Iranian crypto platform Nobitex was exploited, resulting in the loss of more than $90 million in assets spanning a range of cryptocurrencies. The compromise of Nobitex marks a major development within the Iranian crypto ecosystem. A pro-Israel group known as Gonjeshke Darande has claimed responsibility, framing the attack as a politically motivated strike against Iranian digital infrastructure. Our analysis suggests that the theft of more than $90 million was likely politically motivated rather than financial in nature. To read more about Nobitex and the aftermath of the exploit, head down to the links in the show notes. Now, on to the episode. Today, I'm privileged to be joined by Ryosuke Ushida, who is Chief Fintech Officer of the Japan Financial Services Agency, as well as co-chair of the Virtual Asset Contact Group of the Financial Action Task Force. Ryosuke, welcome to the podcast.
Thank you very much, Chengi, for having me at this very famous podcast. So I am Ryosuke Ushida, a Chief Fintech Officer of Japan Financial Services Agency, and I'm very happy to share Japan's journey to regulate crypto and stablecoin, and also happy to share international context as a co-chair of Financial Action Task Force Virtual Asset Contact Group. Thank you very much.
Thank you. We're so excited about that because Japan really is something of a lighthouse jurisdiction when it comes to digital assets and Web3 policy. And your agency, of course, sits squarely in the middle of that. So we know the JFSA is an integrated regulator. It looks across banking, insurance, securities, crypto. Obviously, through people like you, it's a very active voice at international fora with a lot of clout. Can you perhaps tell us a little bit more, though, about your role and your team? So what does a Chief FinTech Officer do? What's the mandate? How did you find yourself in this space?
As you mentioned, FSA is an integrated regulator regulating all types of financial industry, and the crypto and the digital asset space is one of that. And we are in charge of both supervision and enforcement, as well as planning of new policy and legislation. So in that sense, we are integrated regulators. And then as a chief fintech officer, basically I am in charge of innovation and the fintech policy. So when we say innovation technologies like blockchain and the AI comes with financial services. So my role is to strike a balance between innovation and then risk mitigation that new technologies could bring. And then we aim to be pro-innovation regulators. So and then I am contributing to that from that perspective.
And how did you find yourself in this space? How does one become Chief FinTech Officer?
So I joined the FSA back in 2010, and then I have been doing kind of conventional regulators job like supervision of banking sector. But in 2019, I was dispatched to Georgetown University in Washington D.C. and then spent 2 years as a blockchain researcher. So my first academic paper is how to regulate DeFi and then DAO because they have some centralized aspect. And after research, I came back to Tokyo in 2021. Then since then, I've been taking care of technology and innovation policy.
That's great. The questions around DeFis and DAOs, those are practically very challenging. Even conceptually, they're very challenging. So it's good to hear that you've been diving deep into that area of work. Thinking back, when I first started in regulation, there was no such thing as a chief fintech officer. And now it's not uncommon to see innovation-focused functions in different central banks and regulators really targeted exactly as you said at trying to strike the right balance between driving innovation in quite an active way and balancing the risk implications on the back end mind. And I think that's something that's a tension that really demands a particular mode of engagement between policymakers and the industry. And I think we see that very prominently within the crypto and digital asset space. So, I'd like to start by asking you a little bit about Japan's policy journey in crypto. Obviously, Japan was an early adopter of Bitcoin, but also, in a way, an early adopter of crypto regulation. The JFSA was one of the first regulators in the world to implement crypto regulation, not just for AML purposes, but also for consumer protection objectives. And that was years before other regulators started to act. Can you give us an overview of how that happened, of the policy journey so far?
All right, our crypto journey started in 2014. So at that time, we had Bitcoin exchange named Mt. Gox in Tokyo. So surprisingly, more than 70% of Bitcoin transaction was taking place in that exchange operated by a French guy. And then, of course, regulators, FSA, didn't know that at all. But suddenly, nearly 500 million US dollar equivalent of Bitcoin was lost. And then, of course, it had a huge investor protection implications as well as AML safety implications. So it's a kind of wake-up call for us. And then right after that, Financial Action Task Force issued some guidance to require jurisdictions to introduce licensing regime for crypto asset service providers. So that's why we created new regulatory framework for crypto asset service providers in 2016. So we are one of the early adopter of crypto and then crypto regulation. And then because we learned a harsh lesson from that incident. So, but in any case, eventually it was good for us, to develop a comprehensive regulatory framework for digital asset. So, even after introducing first regulation in 2016, we had another high-profile incident like CoinCheck, among others. We decided to tighten to enhance our regulation for investor protection back in 2019. So we introduced so-called a cold wallet requirement to reserve customers' assets in an offline environment. At the same time, we saw a bunch of fraudulent ICO cases. So we felt we need a capital market regulation for specific types of token. So we amended our security regulation, which is Financial Instrument and Exchange Act in 2019, and they introduced security token regulatory framework. And then next revision is in 2022 when we introduced a stablecoin regulatory framework as well as introducing a turbo rule requirement. So with that, I think we had good regulation for crypto asset and then stable coins and then tokenized securities. So I'd say Japan is one of the countries which already have a good regulatory framework.
Absolutely. And many of those guardrails that you put in place, things like the cold wallet thresholds, those have become really a model for other regulators that have also, looked at Japan's experience and then borrowed elements of that when they built their own frameworks. I think sometimes people think of regulation as a single monolithic thing, like an act that comes out and regulations that supplement it. But I love this story because this is really showcases regulation as something that is living and responding to the risks of the day, and that regulatory journey is never really over. So, question for you. JFSA was an early mover, in many cases a pioneer in coming up with these requirements. What do you think some of the advantages and drawbacks were of being such an early mover in this space?
That's a great question. I think one of the positive aspects is that, as you mentioned, when we introduce some requirement that might be referred by regulators colleagues across the globe, and then, we could contribute to the kind of developing international standard and the practice for crypto supervision and the regulation. But the downside is that as this industry and the technology is changing really fast, as a first mover, maybe some of our regulatory requirements might not be sufficient given the fast changing environment. So in 2016, we decided to regulate crypto services under the Payment Services Act because we thought something like Bitcoin would be used as a means of payment. But for now, it's more for kind of investment asset So now we are, discussing how we can potentially enhance capital market regulation, like other countries like EU had to prevent insider trading and the market manipulation. It seems, many jurisdictions are, looking at security and the capital market regulation to regulate the crypto. So, Japan and some countries are, moving on the slightly different direction, but we have to do something more, but it's not necessarily bad. We can, share the knowledge of each countries, and then, potentially, we can improve our regulatory framework in a global manner. So it's not bad, but, we need more kind of research and work in the future.
I think, that's a really good point. I'm based in Singapore, and here crypto is regulated under the Payment Services Act as a digital payment token. And, the services around that are also, are regulated accordingly. And one of the challenges there is then the concept of market abuse and market manipulation is not really as much of a thing in payments versus in capital markets. So how do you best transplant some of those necessary measures over into the act, or do you shift crypto into securities law? Like how do you want to tackle that? Because there is no single perfect way of doing that. There's always trade-offs and frictions either way.
There are variety types of tokens out there. So 10 years ago, it's mainly Bitcoin and Ethereum, but there are so many locally issuing tokens as well as internationally issued tokens. So, we have to think carefully about the characteristics of each token, and then, appropriate regulatory requirements should apply to each service provider.
That makes total sense. And then it just requires just a lot of grunting through the specifics of, the characteristics of each token or the functions of each token and what should apply. Given, how quickly the crypto market evolves, and given that tokens can have sort of more than one function, do you have any thoughts on how regulators can sort of future-proof their regulation or enhance the longevity of the rules that they put out with this rapid evolution of the crypto sector in mind?
It's almost impossible, at least for me, to kind of envisage the future development of crypto ecosystem. If I know that, maybe I will do startup, maybe. But matters for regulation and for regulators, it's to be agile and flexible as much as possible. So one of the example in Japan is we amend our relevant law and the guidelines almost every year. So it's a very time consuming and resource intensive because, the number of bills that FSA can submit in a year is quite limited. But crypto and stablecoin is one of our top priority, and therefore, we are committing to develop sound regulatory environment for this industry. So that's why we spend a lot of time and human resources for this area. That's one thing. Another aspect is private-public partnership. In Japan, we designate self-regulatory organization and to, self-regulate crypto industry. So there are many self-regulations that applied to VASP. So it's not, kind of mandatory requirement, but still a lot of service providers are trying to comply with those regulation. And then, I mentioned that there is no regulation to prevent insider trading at a low level, but self-regulation has those requirements. So, and that's one of the examples that, private sector initiatives are complementing public sector's policy.
Yeah, that's a great example of how, in a way, you can have standards without necessarily having to encode everything in law. And that's a great approach to regulation. Can I shift a little bit? So, there's the regulatory picture here. But as I understand it, and through a lot of the work that you do, the FSA also has an interest in supporting digital innovation. Can you tell us a bit about, what initiatives you have underway when it comes to digital assets and crypto?
Digital asset and then Web3 is one of the priorities for Japanese government. So it's not only FSA's policy, but it's across governmental initiatives that we will try to make the most out of the blockchain innovation. So that's why cabinet office and then policy makers and then relevant ministries and then of course industry experts are working together to make that happen. Because blockchain is changing many aspects of our society. So financial side will be taken care by FSA, but for example, tax policy is handled by Ministry of Finance, and then technology aspect is covered by digital agency. And if it's entertainment like IP, so Ministry of Culture might involve in these discussions. So it's a coordination across agency. It's mandatory to achieve sustainable innovation. Therefore, Cabinet Office is leading these initiatives, and the policymakers has a clear views on how we can develop these sectors, and then financial part is taken care by FSA. So FSA is contributing to that industry and then government initiatives from financial regulators' perspectives.
That's really cool. So as you do this, as all these agencies work together, is there a particular end goal or a vision of the end state of the digital asset sector or the Web3 ecosystem that you're working towards? Is there that clarity of the goal?
I think there is no kind of strictly defined goal as a government, but it's a maybe personal view. But from finance perspectives, blockchain technologies could solve some of the problems that the existing financial system has. So, for example, cross-border payment is one of the pain points facing both retail and then businesses. So, Japan is, I'd say, it's a kind of one of the notorious countries that cross-border payment takes time and then takes cost. So, with blockchain technologies like stablecoin, we might be able to have a better consumer experiences of sending money to or from outside of Japan. So that's one of the example. And then another example is IP contents. So we have Japan has a lot of IP contents like animation game. So that kind of IP could be exported to outside of Japan on blockchain platform, so that both artists or service providers can get the benefit out of that services. So that's just some of the example of our aspect. But and as I mentioned, we cannot foresee the future, but like the internet, what matters is to have good foundations for future innovation. And then it's up to the private sectors, kind of, genius guides to, make something out of that.
Yes, it's hard to forecast the future in any realm, but in crypto, it's particularly challenging. I certainly wish that I had forecast where Bitcoin prices would be 10 years ago, but here we all are earning a wage. I think it's really interesting. So I think what you said goes to one of the fundamental factors of blockchain that makes it so exciting. We're not just talking about Bitcoin, about crypto assets. We're not even just talking necessarily about financial services and how, blockchains can solve some of those pain points that have been dogging financial services for many decades. In a way, this has the potential to be a new form of digital infrastructure that will enable new modes of economic activity and new ways that economies as a whole can engage globally. And for that, we do need a strategy that does cut across agencies. And so often when we look across the world, we do see sometimes a bit of a siloed approach. So often each sector or each agency will have its own strategy or its own concerns. How do you tax crypto? How do you investigate it? How do you grow it? In some countries, how do you mine it? But all of those pieces can kind of join up together. I think Japan is one of the few places where, you see at least an attempt at a coherent whole of government strategy. What do you think it is about Japan that enables the government to be able to take such an expansive cross-functional approach?
So usually financial regulation is very kind of complicating. And then it's it's a kind of very technical. So that's why draft bills was mainly prepared by FSA rather than politicians or policymakers or industry. But when it comes to the Web3 and the crypto industry, definitely regulators need input from an expert. And then that's why policymakers and the industry and we are working together to make that happen. And then I think we had a good relationship. Sometimes, industry and the regulators have a tension. And of course, we have a tension on some of the topics. But still, we can make a candid exchange of opinion, even though we have slightly different goals. So that's why for years, we are successfully developing our regulatory framework. But having said that, we have a lot of challenges in front of us. For example, income tax is one of that. And as I mentioned, to enhance capital market regulation is indispensable for the sake of investor protection. And then, of course, ML safety is a huge challenge. It's North Korea-related hackers are attacking Japan and the international crypto exchange. So that's a real threat to not only Japan and the international society. So there's a huge opportunities as well as risks. So it's not easy, but we keep trying to strike a balance between innovation and risk mitigation.
You've brought up something very pertinent, hacks and theft. Obviously, they are a perennial, evergreen challenge for crypto, and they've also been escalating. And you pointed out how, there were these big incidents, Mt. Gox, CoinCheck, that really shaped the trajectory of Japanese crypto regulation. So, over the past year, we've seen, DMM Bitcoin, Bybit. Hanging over this is not just consumer protection concerns, but also like sort of a national security threat because of the involvement of DPRK actors. So, I'm wondering, how do you expect regulators and supervisors to respond? Do you expect further tightening of rules? Do you expect further clarification? What is the likely course of regulatory and supervisory action in responding to this threat?
So I think we need to tackle these challenges from both domestic and international perspectives. So domestically, we are asking crypto exchange service operators to enhance their security measures after the DMM incident. And of course, Bybit is another high-profile hack. So we are very much looking at security and the cybersecurity aspect of crypto asset custody. So that's one thing. And then from regulatory perspectives, it's my personal opinion, but I said we introduced a cold wallet requirement back in 2019, and it was working quite well. But because previously hot wallet was a honeypot by attackers. But recent incident like DMM and Bybit, cold wallet was attacked. So just having a cold wallet is not enough. Crypto exchange need a governance to manage keys and then to have a good internal operation to secure the private keys. It's a kind of never-ending story because DPRK and the other actors are advancing their solutions, and the attack vectors could be changing in the future. So we try to enhance regulatory requirement if necessary, but more importantly, we will work with industry and the regulated entities to ensure safe custody of customers' assets.
One of the forums where I found the most thoughtful discussions of, the issues and the vulnerabilities underpinning these high-profile hacks like Bybit, and, the appropriate responses that industry can take. Some of those most thoughtful discussions were in BGIN, the Blockchain Governance Initiative Network, which, is, because I think you were involved in setting that up, but it's a fantastic decentralized network of industry players that, come together to research and propose standards for key challenges within crypto. I understand that JFSA had a key role to play in Begin getting off the ground, and you maybe were involved in Begin in the earlier years. Can you tell us a little bit more about that? What the thinking was behind setting up Begin, and what your experiences in corralling industry players together.
Thank you for bringing this topic. So at Begin, our blockchain governance initiative network is multi-stakeholder body for all crypto stakeholders to have a discussion and then to develop policy and the papers and that could benefit and sound governance development of this ecosystem. And then it was set up in 2020 when I was a researcher at Georgetown University, and then one of the professor named Shinichiro Matsuo was a co-founder of Begin. And since then, Begin had a number of meetings as well as prepared some papers, including custodial security standard, and then NFTs, and then DeFi, and that kind of important topics. So Begin is learning a lot from internet governance history. So rather than regulators and the policymakers decide everything about this industry, they are looking at how the sound governance could be developed in collaboration with all stakeholders, including developers and then industry experts like you. So the FSA is one of the contributors to that Begin. But again, Begin is kind of neutral and the academic body, and the FSA is just one of the contributors. But we hope more regulators, colleagues, as well as industry experts could join this platform and then to, have a good discussion to tackle key challenges like DPRK hacks, and then travel rule could be another interesting topics. But fortunately or unfortunately, we had a lot of challenges in front of us. So there are so many industry body, but begin could be one of the key part for.
I agree, and I think the fact that there are so many challenges ahead of us and the fact that the industry is moving so quickly at such a fast pace, in a way, you can't just leave it to regulators to kind of figure out the best path forward and all the, the best responses that industry should take. And I think there is a lot to be said for a self-organized response, particularly, given the ethos of the crypto sector, the decentralization that, we always tout, and the idea of, the community coming together to build certain standards even before things are hard-coded into regulation. I think that's like a recurring theme now through our discussion. I want to take a step back and talk about something a little bit maybe more lighthearted or exciting, which is, parties. So I wanted to talk about Japan FinTech Week, which the JFSA has now run for 2 years now. It's been an amazing experience each time. Different events under that broad banner. Can you share a little bit about what's the objective of FinTech Week? What's the thinking there?
So, Japan FinTech Week is something like Singapore FinTech Festival and then Hong Kong FinTech Week. So it's a mix of conferences and networking where FinTech experts, including digital asset experts, can join and they had a candid exchange of opinion, and then a lot of regulators, FSA regulators are joining that conversation. And then we decided to launch Japan FinTech Week last year because, as I already mentioned, multi-stakeholder collaboration is indispensable, especially for the digital asset sectors. But and the international expert, we would like to have a more good competition in Japanese market, and in order to do so, we would like to attract a lot of international experts like Chainalysis to our market, and that's why we decided, to have this kind of conference, which is a good maybe opportunity for those who are interested in Japanese market but that doesn't know how to actually get into our market. And I think it's a unique opportunity for industry people to see how the Japanese crypto and then fintech market is like, and then how friendly the regulator is, and then maybe there are potential partners in Japan. So maybe you can talk to crypto players or banks, insurance companies, whatever, to make something happen. So it will take place March every year. So March is one of the good season in Tokyo. So you can come and see what's going on in Japanese market.
I think it's clearly very successful at bringing the international community to Japan. It feels like for 1 week in Tokyo, the entire world is there. I'm told that the pinnacle of the event this year, which I unfortunately missed right at the end of the week, was an open mic night. Can we expect that to happen again next year? Can we expect you to be performing?
I'm not good artist, but definitely, actually it's a kind of decentralized event. So a lot of organizers organizing a lot of events during Japan FinTech Week, and some of them are provided by GFTN. It's a Singapore global entities which are operating fintech conference all over the world. Yeah, they are organizing some fun night. And the local organizers are also arranging some meetups or networkings. If you like music, you can go there. And then if you like some other event, like manga or whatever, you will find something which might interest you. We try to update what's going on next year. So please stay tuned.
Is there anything in particular that we should look forward to next year? How is the FinTech Week going to evolve?
So I think digital asset will continue to be one of our priorities. And for example, stablecoin. So our first stablecoin was USDC, which service providers was granted license March this year, finally. So now USDC is available with custodial wallet in Japan. But going forward, we will see both local and the international stable coins issued inside Japan or outside of Japan. And we will expect a good use case of stable coin. So that kind of discussion will take place during Japan FinTech Week. And the another aspect is AI. So what makes me busy these days is AI, but the AI and the blockchain could be complementary each other. So, how we can achieve if we can combine an AI and the blockchain could be another interesting discussion topic. We will have a number of topics for international audience.
I look forward to it. I just want to go back to what you said earlier about stablecoins. Japan, again, one of the first countries in the world to come up with a stablecoin regulatory framework. We are now starting to see those frameworks come into force in other jurisdictions. Hong Kong just passed its stablecoin law. In the EU, MiCA has now taken effect. In some of these jurisdictions, or shall I say, as these national frameworks get rolled out, one of the recurring themes that we hear is the concern about regulatory fragmentation. In an inherently global business model, it can be challenging for issuers to meet specific regulatory requirements in every jurisdiction. And in some of those jurisdictions, if you're not licensed as an issuer, then your asset can't be distributed to the local user base. So how has Japan threaded that needle?
As you mentioned, stablecoin and then crypto transaction is global by nature. So ideally, we should have a kind of harmonized regulatory framework in each jurisdictions. And then from BCG perspectives, so both crypto asset and then stablecoin service providers should be regulated in each jurisdictions, and the ML safety controls should be put in place. So it's a kind of minimum standard for ML safety sake. So part of expect all jurisdictions to implement part of standard for both stablecoin and then crypto asset service providers. But unfortunately, the implementation is lagging for years, partly because low capacity jurisdictions won't have much resources to make it happen. So part of it's providing a lot of technical assistance, and then we are working together with international body like IMF and the World Bank to provide support to those jurisdictions. So that is one of the coordination effort to accelerate global implementation of FATF standard. So ideally, of course, travel rule is one of the requirements. And then if all jurisdictions introduce FATF standard at minimum level, so we will have a coherent regulatory requirement. And then FATF, of course, does not prohibited to put additional requirement on top of the FATF standard. Each country is facing different risks and then different policy and the regulatory objectives. So regulatory difference is kind of natural. For example, security regulation, Security Act in United States and in Japan are very different, for example. So financial regulation is fundamentally different by countries. But having said that, FATF and then some international standardization body like IOSCO and then Basel and then FSB are working very hard to harmonize its regulatory objectives from both ML safety and the financial stability and the investor protection perspectives. So it's still ongoing challenges, but I think we are working on the good direction.
Yeah, I think the international standard setters clearly have an important role to play in forging some level of international consensus on at least the direction of travel and the key pillars that regulatory regimes need to have. I think your mention of stablecoins was very timely, just because we are really seeing that in the data that we look at. As stablecoins become more widely used, as they become more accessible, they also equally become appealing to criminals and illicit actors for various kinds of illicit purposes, so that majority of illicit flows today in crypto that we see on chain, majority of those flows are actually denominated in stable coins. And I think there's a lot of attention and a lot of thinking, not just, I'm sure, within the regulatory community, but also within the industry on, what are some of the newer tools that we can apply to this problem of illicit finance in stable coins, whether and to what extent issuers can and should be looking at how their asset is flowing in the wild in the secondary market and what actions they can take around that. So, I think that I'm not going to push you to have a comment on that specifically unless you would like to, but I do think that's an area that everybody is sort of quite keenly focused on in terms of what's the industry best practice and also what are the regulatory expectations.
As you rightly pointed out, stablecoin is being widely adopted globally, and as a result, some malicious actors are using stablecoin for illicit purposes. The FATF is aware of that, and then we highlighted that illicit use of stablecoin stablecoin in the previous report published June last year. And then the part of BCG is going to launch a new project delve into details about stablecoin ecosystem. The details is not yet decided, but we are going to look at market development recently and then some typologies of use of stablecoin. And then potentially we'll explore how we can potentially mitigate the risks that a stablecoin could bring. And then if we say stablecoin, there are many types of stablecoins on different blockchains. And then we need a more kind of granular discussion and analysis on, which types of stablecoin has, risks and how we can prevent that. So that's one of our priorities. And then we definitely need input from private sectors.
We have a keen interest in that work, of course, and here at Chainalysis, we're always happy to participate wherever we can and contribute wherever we can. But I think that work that the FATF is doing is going to be very important. So just while we're on this risk perspective, while we're talking about the FATF, aside from hacks and theft, aside from DPRK, aside from, stablecoins as a vector for financial crime, are there any other sort of financial crime trends that are on your mind, either with regard to Japan or to the broader crypto ecosystem?
So in Japan, crypto asset unfortunately used for scam and then fraud from many aspects. Maybe it's similar to many other countries, like, investment scam or romance scam, and then ransomware continue to be one of our serious challenges. And then crypto asset like Bitcoin or Monero often used for the transactions. So then stablecoin might be used for the similar objectives. I'm not sure how Japan's market financial crime landscape is different from other countries, but obviously this is a global issue as highlighted by FATF's report. So we are looking at both, high-profile incident like DPRK hack, as well as scam and fraudulent use of Bitcoin because it harms retail investors and then it could disrupt ordinary people's lives. So it's very important for the sake of financial regulation.
Yeah, that's a really good point. I think scams and fraud are the key challenges or the focal points across both law enforcement and regulators that we see across, all the countries in APAC. It's really wherever you look, not just investment scams, also romance scams, and the shape-shifting nature of it. It's very difficult to obviously physically disrupt the actors, the scam compounds. And so one of the key elements of the response does need to be to follow the money and try to stop those illicit proceeds from reaching the hands of the criminals behind them and being reinvested in more fraud. So I know kept you on the line for quite a while, and we've gone through some fairly weighty subject matter: DPRK, scams, hacks, ransomware. So before we end, I just wanted to do something a little light and fun. So if you're okay, we're going to do a quick fire round, one word responses. What in your view is one word that is overused in crypto?
It's maybe decentralization.
Decentralization is a good one. It is a recurring theme.
Some of them are not that decentralized as the name suggests. So
one of my teammates always says this: there are governments that are more decentralized than crypto. So yes, that's for sure. Okay, how about one word that encapsulates crypto regulatory priorities for the next year?
Harmonization. Maybe it's a boring answer, but harmonization is definitely needed across, within jurisdictions as well as across jurisdictions. So that's very important.
Harmonization. That is music to the ears of many global crypto businesses. Final one word that describes next year's Japan FinTech Week.
Tangible use case. So, maybe we will see the real use case or examples of blockchain-based financial services next year. So you will see that at the Japan FinTech Week.
That's awesome. It's aspirational, but that's fantastic. I think we're all looking forward to that. So thank you so much for your time, Ryosuke. This has been such a rich conversation. We're very grateful that you spent all this time with us. We're really looking forward to the next Japan FinTech Week and everything that you guys have in the pipeline. Thank you very much.
Thank you very much. I really enjoyed that conversation. So thank you, Tenki and Chainalysis for having me.
The recent Circle IPO has reaffirmed to the digital asset industry that stablecoins are trending up and are critical to crypto markets. But they also come with distinct security risks depending on how they are issued and managed. Our team's recent blog talks all about what makes stablecoins attractive yet vulnerable. We highlight the different types of stablecoins and the common risks that come with them, and discuss how Chainalysis Hexagate helps users and platforms detect and respond to suspicious activity involving stablecoins in real time. Head down to the link in the show notes. We appreciate all those who have been loyally listening to every episode, especially with top-tier industry professionals that have joined the podcast for Season 3. We know you have been sharing these episodes on social media with your crypto compliance teams and industry friends. Your engagement is the reason why we are one of the top podcasts at the intersection of crypto, blockchain, policy, and compliance. Keep on sharing.